Welcome everybody to our webinar. My name is Kristen Carlin. I am the Director of Marketing for 401k Plan Professionals. If I haven't met you, welcome. We are excited to have Jessica Ruggles with us today. She is a guest host. This is Financial Wellness in the Workplace Research and Trends. So this is our team. We have Jessica Ballin, Gina Buckles, Jenna Witherby. Those are our three advisors, and then me. Can advance. And just a little bit about our webinar series background. These are about 20 minutes each, a variety of topics, not just 401k. We have 6 scheduled for 2019. We'll send out a recorded link shortly after. And please feel free to share these with other people. These are meant to be shared. You can find them on our YouTube channel, our website. We just want to keep disseminating information and education so that everyone can be brought to speed and comfortable with their retirement plan. And this is Jessica Ruggles. She will be our guest host today. She is a wellness consultant for Prudential. And because of our shared interest in wellness for participants, that's why we brought in Prudential today and Jessica. So I will hand it off to her. Thank you.
Great. Thanks, Kristen. If everyone can see my slides, hi, I'm Jessica Ruggles. I'm part of the Financial Wellness Customer Strategies team at Prudential. And what I do is I work with our clients on understanding their biggest human capital challenges and also working to consult on innovative solutions that help promote engagement, talent recruitment, retention, well-being, productivity, and ultimately positive business outcomes. I'm really excited to partner with 401k Plan Professionals today and really share how Prudential is thinking differently about financial wellness in the workplace, trends that we're seeing in the market, and common concerns that our clients share. So one thing that I love to talk about first when really thinking about financial wellness is that you have to think about the 5 pillars of well-being. That financial wellness is really important, but it's part of this broader overall package. So when you look at how lifestyle affects biology, health, wealth, and wellness, there are a couple of things that really start to connect. So physical, spiritual, social, emotional. The New Economics Foundation said that health and well-being can be defined as how people think and function at a personal and social level and how they evaluate their life. And our research in partnership with the Stanford Center on Longevity really showed this holistic view of well-being. So I like to highlight just a couple of things here. When we think about how this underscores healthy living connected to social engagement and financial security, it all has absolute intertwinement. So we saw that those who experience debt-related stress actually have more ulcers, migraines, and heart attacks. So we're really seeing this connection between health and wealth, and the same goes for social engagement. Social connection is actually the greatest predictor for long-term happiness and as predictive of how long you will end up living as obesity, high blood pressure, and also smoking. So despite all of these connections that we have thanks to technology and the ability that we're always able to talk to someone or connect over social, we're actually seeing spikes around things like feeling lonely or deaths of despair ranging from suicides to opioid addictions. And then we see that Americans, even though there's this absolute intertwinement, people are falling behind in these 3 spheres, so the healthy living, the social engagement, and financial security. So when we're in the market thinking about improving financial wellness, we're really trying to think about how we can help our clients and our advisors understand the connection of all these different spheres so that they're able to all be more consultative and effective in the market with their conversations. So I'm going to talk about a couple of different perspectives, the first being the employee perspective on financial wellness, and then moving into the employer perspective. The Edelman Barometer Trust Survey showed that 75% of people look to their employer as a trusted source to help them. So we know that the workplace is where a lot of lives, financial lives especially, come together. We spend a lot of our time at work, but it's also where we get our retirement, our 401k. It's where you get our life insurance. And those who are distracted by their financial stressors, we actually found in our own wellness study that 57% of employers say that they are stressed about their financial situation. This can impact productivity. And our research shows that close to 90% of American workers say it would actually be helpful for employers to provide access to financial products. So not only are your financial lives coming together at the workplace, but really the workplace is where folks are looking to have solutions and tools offered by their employers. Similarly, employers' perspective is that they really do have a vested interest in promoting employee financial health through programs. There was a very recent Prudential study for a census that came out earlier this year, and we surveyed about 2,000 American workers, and we found that 60% of them are actually more likely to think highly of their employer if their employer offers a wellness benefits package. So we know that these wellness programs can help employers achieve a lot of objectives that they have in the workplace, but it also helps with improving productivity, maximizing benefits, and ultimately employee satisfaction, which helps with talent recruiting and retention. We also saw that program measurement and analytics help employers better understand employee financial wellness behaviors and what they're looking for when they're trying to mitigate stress. So the 2018 financial wellness census showed that a lot of Americans have skewed perceptions of their financial health. And one thing that I like to spike out on this wellness census is that American optimism is not dead. Even those who are struggling financially, many of them dream of having a financially secure retirement. And actually 17% of those that were in the study perceive themselves in good financial shape despite having low objective levels of financial health. So we need to help people align their wonderful optimism with realistic goals. We understand how we're able to show financial wellness and how it impacts people in multiple ways because we've actually done it ourselves. So in understanding the risk impacts, we turn to understanding the connection of improved financial health and how that impacts our broader workforce. So these numbers in front of you are actually from an 8-year longitudinal study that Prudential did with our own workforce. So for those individuals with really high levels of stress, they were reported they were incredibly stressed. They were also 237% more likely to report life dissatisfaction. Similarly, they were more likely to report job dissatisfaction, which makes a lot of sense, right? If you are 237% more likely to dislike your life, you're probably not going to like your job either. So something else that we saw with that connection to social health and emotional and physical was that those who said that they were really stressed were also 190% at greater risk for depression indicators. So when we talk about depression indicators, there are actually 9 different indicators according to the DSM diagnostic manual showing that those that were showing tendencies for depression. There was also an 88% greater risk for overall stress and a 50% likelihood to have a disability claim. So what we did was we implemented a financial wellness program and rolled it out in different ways along that 8-year period. So there are different levers that you can pull within a financial wellness program and understanding where it's going to peak and where it's going to help. So as you can see the chart in front of you, there are different peaks along the way. So for instance, in 2009, there was a stress level of about 34%. Now, if we think about the economy in 2009, everybody was stressed, right? So what we did was we benchmarked this against the WebMD national benchmark for financial services companies. What we saw was with that 34% is that Prudential's workforce was actually 5 percentage points higher than the national benchmark. So we did things like rolling out retirement workshops, introducing on-site education, introducing things that moved beyond just the benefits plan, like paid parental leave and childcare. So all these different levers that we were able to pull really helped to significantly decrease stress. So we saw it go from that 34% down to 16%. And we do have the data for 2017 and 2018, and it still stays around that 15 to 16% mark. So even as the economy is getting better, we're showing that the rate of stress decreased significantly, especially staying below the WebMD national benchmark. So the ways that we were able to reduce financial stress showed significant efforts. But those who said that they were really incredibly stressed, then they decreased their stress to low or moderate. We saw that with those folks, they were 47% more likely to say an improvement in that life satisfaction category, a 25% reduction in overall stress, a 23% reduction in those depression indicators, and a 19% improvement in job satisfaction. This can also be quantified because we saw that those on average missed 1 week less of work per year. And also, those that were less stressed were 2 times less likely to leave their job. We also saw a reduction in things like disability leave, because we're able to really showcase what a program Holistic Reach can do. So with our approach, we take our learnings from what we're able to implement with our own workforce and really apply that to when we're working with our clients. As an early pioneer in the financial wellness space, we made progress in addressing and reducing financial stress. So now it's helping to inform the design and solutions that we're able to roll out. So with that, leveraging ongoing research that we do for our own workforce, coupled with the data that we're able to provide for our current clients and academic and actuarial research, we actually have a way to help define wellness as a better way to improve and address behaviors that can help individuals better manage day-to-day finances, achieve important financial goals, and then protect against key financial risks. It also informed the design of really targeted solutions like guidance, management, debt and credit coaching, student loan assistance, our in-plan after-tax emergency savings feature, and our education and engagement program. So there's really this omni-channel approach to how we're able to structure our engagement, but also constantly influence and inform our design of our solutions that we're able to tailor for our clients. We received a question beforehand asking if this webinar was going to address certain solutions and understanding how we can recruit and retain talent. And I think that this question was probably from someone in HR, and it makes a lot of sense. So what I wanted to do in talking about trends was really address that question about how we're able to recruit and retain talent and what we're seeing across all different industries and generations. So one of those solutions that really is multi-generational, and we're seeing it across tons of industries, including healthcare predominantly, is student loan assistance. So when I talk about that, managing day-to-day finances and achieving your short and long-term goals to then protect against things that you can't plan for, because life is not moving in a linear fashion for any of us. So we're really helping people to address what stresses them out the most, and one of those key stressors is student loan debt. We understand that having a program available to our clients and their participants is really imperative because it helps them achieve those goals. So student loan debt is really timely, definitely something that's talked about in the political discourse right now as well. And what we're able to do is...
Did you see my...
In the United States, we see that student loan is actually one of the leading causes of debt. In 2016, the student loan debt was about $1.3 trillion, and it's projected to be $2.4 trillion by 2024. So we know that it's of concern to employers, to employees, and it's also really a political focus of discussion today. So when we think about student loan debt, we understand that 70% of folks that do go on to graduate with a degree, 70% of those people have student loan debt. And it's an average amount of about $37,173. Now, if you think about how much the starting salary is, which is around, $45,000 to $50,000 a year, that's a debt-to-income ratio of about 75%. So it really creates this life on hold, because if you have a debt-to-income ratio coming out of school of 75%, can you afford a car payment or a house or to save in a meaningful way for retirement? Probably not. So what we're seeing is that the generations are slowing down on key milestones. Millennials are delaying decisions to buy a house. Folks that have student loan debt are putting off saving for retirement because they need to meet this immediate need first. Now, what I do love to mention is that this is absolutely more than a millennial issue. 15% of those with student loan debt are actually over the age of 55. They are carrying it for their grandchildren, their children, their partner, themselves. But this is a key retirement age. So we're seeing that this is going to actually affect the income stream for those that are in retirement. So what we have done at Prudential is to provide a student loan assistance program that is in partnership with Vault. Vault is a fantastic provider of different ways that we can address student loan assistance, and they've been thinking about ways that we can help by using two options, Vault Advisor and Vault Pay. Now, Vault Advisor is available at no additional cost, and what it does is it models customized payoff plans based on the employee's loans and offers one-on-one advising for their situation. And there are three goals to choose from. They can lower their payment, they can pay it off faster, or they can refinance. And all this is done outside of the plan. Vault Pay, it allows employers to contribute towards that principal payment of the loan, and it helps to drive employee engagement and retention. And you're able to decide which bucket of workers that you can pay this for. It's a tiered system for per user, per fee, per year, but Vault Advisor is available, again, to all participants that wish to use it. So what we're seeing is that those individuals who take advantage of student loan assistance, they're able to see a dramatic decrease in stress, but also there is a significant increase in retention. We see different stats, like 90% of those that have access to a student loan assistance offer actually say that they would stay with their employer for 5 years or more. That was a recent study in the U.S. News. And we also know that those who have access to student loan assistance, they're going to be able to lay that really critical foundation for long-term financial success. So I hope you're able to gain some insight from this webinar of understanding Prudential's research, our ongoing framework, and one of the solutions that we offer, which is helping to pay down student loan debt by having an assistance tool. So please visit our wonderful friends, 401k plan professionals, online at their website, or you can click to subscribe to their YouTube channel, watch other recorded sessions like this one, and look to subscribe for updates on additional webinars. And one of those additional webinars will be in August. And in August, there is a session on specific financial issues women are facing in the workplace. Thank you so much for joining us, and we'll talk to you all very soon.
Thank you, Jessica.
Thank you.